Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool, also known as Mr. Valuation. As Mr. Valuation, one thing I'm constantly doing is I'm searching the universe of stocks out there that are available to me in the U.S. and Canada primarily currently, but that'll soon be expanded to international in the future. But I'm constantly looking for attractively valued stocks. I've talked about this quite a bit in recent videos. This current market environment is very, very high. The S&P 500 is trading at not just an all-time high, but an all-time high or a very high valuation, I should add. And to me, you make your money on the buy side. As Warren Buffett once said, price is what you pay, but value is what you get. So one of the places I look for, and I'm always looking, by the way, I might also add, I also like dividend paying stocks a whole bunch, but I also like growth stocks. Now, I believe I found a combination of both for you today. The company I'm going to cover is one of the fastest growing companies that I've identified, so I would call it a pure growth stock. I believe it's very attractively valued, so I would call it growth at a reasonable price. But it also is a reasonable dividend yielding stock, as I'll show you when I get into disclosing the company. But the most impressive thing that I saw was it's one of the fastest growing dividends that I've ever seen. So if you're a dividend growth investor looking for a reasonable current yield, this company foots the bill. If you're looking for high capital appreciation, this company seems to foot the bill as well. Now, I've just started researching this company, but the more I dig, the better I like it. And I'll kind of go through that with the video here. So let me go ahead and get into the company by turning to FastGraphs. And I'm going to do something also a little different here. I get asked virtually every video, when is the new version going to come out? And I know it's been frustrating, and certainly it's been frustrating for me. But I'm going to utilize the new version of FastGraphs in this video, which, we're currently testing, and we're getting very, very close. This one, I've tested it out. Everything seems to be working on this particular company. So I'm going to use it, but I'm also going to take this opportunity to introduce some of the new features that are available in both the FastGraph tool itself, as well as the fund graphs, or the fundamental underlying numbers, which includes the financial statements. We've made some improvements that, are going to be very, very exciting once we get this launched. So let's go ahead and turn to the FastGraph tool. This is the new version again, and I want you to look at the company Medifast. Now, Metafast they build themselves as a leader in the health and wellness space. Okay, according to Zacks Investment Research, the company it's also a remarkable direct seller in the industry, and that's also very important. They have what I believe are 36,000 counselors that work with people in selling their products. And it's the Optavia brand, which generates, I think, over 85% of their total revenues in business. But they have, quite an array of products, which we can look at and get into here as we go through the video. But here's what I want you to see, and what I want you to notice about this particular company. First of all, its growth rate is 25.4%. Now, how I found this company is I went through the CCC list, which are champions, contenders, and challengers. Yesterday, I recently did a video on 11 dividend contenders. Those are companies that have raised their dividend for up to 24 years, from 10 to 24 years. The dividend challengers list, on the other hand, are companies that have just started paying dividends typically, but are on a streak. This particular company, Medifast, started paying their first dividend in 2015, and they've paid a dividend every year since, and they're currently on a streak of 6 consecutive years of increasing that dividend. The company's current dividend yield is 2.19%, which is, attractive to the point or relative to the overall stock market currently right now. So I do believe it offers a very nice dividend yield, but it's not so much the dividend yield itself that I am impressed with. It's actually how fast the dividend has been growing. In fact, I believe it is the fastest dividend growing stock that I've seen. And by the way, let me correct something. This is one of the reasons we haven't launched a new version. The actual current yield is actually slightly over 3%. It's 2.99%. This is still, we still have some data issues, or we're still a little behind. but currently the current yield on this stock is almost 3%. Let me bring in the old version of fast graphs real quick so I can, illustrate to you. It's 2.99%. The company has a $2.2 billion market cap and only has 7% debt to capital. So it's a very interesting little company. But when you look at it from the standpoint of performance, and let me do that through the old version also because this is working the best, I want you to note that the dividend income off of this company has been remarkable. Now, had you put $10,000 in it, back in 2000, in calendar year 2000, the stock was trading at a very low price of only 14 cents a share. It has created just a remarkable amount of wealth over this historical time frame, turning 10,000 into 14 million over that time frame. But I want you to note they've only started paying a dividend since 2015, as I pointed out. So your first year's dividend, this was a growth stock, if you will, that ultimately morphed into a dividend paying stock. It's thrown off an enormous amount of dividend income over this time frame, as you can see, because you would have bought 74,000 shares had you bought it at 14 cents a share. The closing price yesterday was $189.79. So you can see it's just been a monster performer over this time frame. But I want to point something else out about this stock as well. It's, again, the value of the stock was only 14 cents in 2001. The high was 50 cents. And you can see it's had some really interesting growth. But if I go back in time here and look at this, what I think is really interesting is the company was growing very, very fast back in these days. I'm looking at 2001 through 2010 here, and you can see this idea of valuation that I talk about so much, where the stock got very overvalued and corrected back to fair value, got overvalued, corrected back to fair value, had a weak year, brought the stock price down, got undervalued, and then, of course, all of a sudden starts screaming on earnings growth. And you can see the stock price following their earnings results by simply going through these different time frames. I'm rolling up here to 2016. And remember, they started paying their first dividend. So, the long-term record of this company has been absolutely spectacular from that point of view. Had you had the foresight to invest in it, back when it was, not doing much, earning about 9 cents a share, note how much the earnings have grown. This company's grown at over 24% a year. All right, so this is good data here. The earnings yield's about 6.8% for a growth stock. That's very, very attractive. So these are all the things that I really like and look for in a company. And I want you to note that it's currently trading with a very nice margin of safety. If I look at forecasting here, the forecasting expectations are for 55% growth this year, followed by 17% growth next year, followed by 12% growth thereafter. Now, it's not widely followed. It's a mid-cap, as I pointed out. There are only 3 analysts, but the return potential, including the margin of safety here, if it simply goes to a 19 or 20 PE, which is, consistent with the company's earnings growth, and it's also consistent with the normal PE has been about 22. So there's really a lot of upside on this particular stock. But I think the real key thing here is to look at the dividend results. So I'm going to shorten this time frame into something a little more reasonable here for you so that it puts it into a little more modern perspective. If you look at this company, since it's paid a dividend, it's grown the dividend on average over 100% a year, on compound average over 78%. Last year's dividend was $4.52. They're currently on track at paying $1.42 a quarter to pay a dividend of $5.68. So this is a powerful little growth story here that is really growing their dividend very fast. Now, I'm not really, trying to tell you that it's going to continue to do that in the future. But, if you look at their payout ratio, the company's payout ratio has been in the 40% range. So it's a very, very interesting company, and you can see that based on its growth. And I'm going to shorten the time frame here for you again, going back to the new version of Fast Graph, which again, we still have some data flaws, but it's also got some really interesting perspectives. Now, one of the stories that I want you to hear here or to know here is that in 2016, they got a new CEO named Dan Chard. And Dan Chard took this company in 2016 and has grown it at a monster rate since then. He's really revamped the company. So if you look here, their earnings went from $1.89 in 2016. They grew by 21%, 102%, 29%, 53%, and estimated to grow 55%, as I already pointed out, this year. So under his tutelage, it's had just an enormous, growth spurt. So if I shorten this time frame a little bit and get to just before he came on board to where he's been on board, you can see that the performance has been just under 29% in terms of capital appreciation. Add in dividends, and it's about 30%. So this is a real powerful growth story here. And apparently, the new CEO really knows what he's doing and what he's talking about. Now, I've begun conducting research on the company. I really like the fact that its price is low. Now, there have been, they did have a controller that quit a few years ago, and I think, there's some issues that are causing the stock to be cheap, and I'm still looking into that, and I would suggest you do also. But from everything I've seen, this company looks extremely attractive. Let's go through some of the other metrics. Let's look at operating cash flow. The company generates very strong cash flow growth since 2015, or since, Mr. Chard came on board, has been about over 25% a year. I could shorten this one more year and hit his exact time. It's actually been 29%. So I kind of shortchanged him here. The company also generates an enormous amount of free cash flow, which I think is important. And free cash growth is expected to explode in 2020, which I found that very interesting. I also want you to look at sales and sales revenue, because this is what I think is really attractive. Now, this is on a per share basis. Since he's taken over, sales per share have gone from just under $23 to over $128. Okay, which has been absolutely remarkable growth. And once again, you see this, hype where, people get really excited about the stock and drove it up to crazy valuations. And then we saw it come back into fair value. And of course, COVID hit and the stock dropped. And COVID's actually been somewhat of a benefit for the company as far as its products and services. Then it got overvalued again. And now we've got it with a nice margin of safety. So I'd like to now take you into the new version of Fund Graphs here and let you see some of the benefits that I see about investing in this company when I'm looking at its financial statements. And we've added some new features here that I want to showcase for you so that you get to understand, just what this new version is going to offer you when we finally get it launched. So let me start out by looking at things like the cash and short-term investments on hand. The company does have, let me get rid of this one metric here. The company does have $14 a share in cash on the balance sheet. So that's very attractive. I'm going to move that into millions here, and that translates into $174 million worth of cash. Now, the company has very, very low debt. Okay, and so when I look at their total debt, they have about 11 million or so of debt, and their debt's actually gone down in the last year. That's total debt. The company does have a very healthy balance sheet as a result, so you can see that, quite clearly. When I go to the income statement, a couple of things I want you to see in the income statement that I like to analyze. Let's look at basic and diluted shares outstanding. In this case, they're almost the same, but I do want you to notice that the company has been reducing their share count since the Great Recession of 2008. Now, if I look at that from the standpoint of, the company's valuation, you can see that, they had many opportunities to buy shares when the shares were very, very attractively valued. I think that's an extremely important point that I want to make when I'm looking at this. So as I go through their financial statements here, they have reduced their share count. They've also grown this dividend at this crazy, crazy rate. The company's got plenty of cash on the balance sheet, as I already showed you. They have very little debt on the balance sheet, and they're growing their cash flows at an enormous rate. So it's on paper, it looks like an extremely interesting company. So I did turn to some of my research services here to look a little deeper. And the one I like is Zacks. And Zacks did an article on September 21st, and they said Medifast were relishing on Optavia's strength and growth plans. And again, that represents about 80-some% of their business. And it's a food plan that's beyond just a regular diet plan. It's really not a diet plan like some of their competitors, like, that we all know about, Weight Watchers and so on. They're counselors, try to educate their people on how to eat healthier and live better going forward. And they do have this Optavia is as much a lifestyle solution as it is a diet program, at least according to everything I've seen so far. And it's on a very, very fast growth plan. So they did another article in Zacks that I thought was very interesting. And they said that if you're a value investor, this number one stock could be the perfect fit. And of course, back here, they were mentioning, Medifast, with 40 years of experience in the health and wellness space. It has become a remarkable direct selling company industry. It's also known for its leading health and wellness community, they refer to it as Optavia, which provides lifelong transformation, one healthy habit at a time, lifestyle solutions. So there's a lot of research you could do on the company. The Wall Street Journal shared a press release the company did where they pointed out that 81% of U.S. adults value support from someone with similar experiences. And most of their counselors, I believe that's what they call them, counselors that work with their customers, are people that have had success with the plan themselves. And I think there's 37,000 of them out there. And it is a direct, marketing program. So you also need to be aware of that. But it's also a company that's had, tremendous historical results, as I've shown you. So this is Metafast. I consider it a growth stock. I consider it a dividend paying stock with almost a 3% yield currently, or it's actually slightly over 3% because if I'm not mistaken, the stock has dropped just ever so slightly. Yes. And so now the dividend yield's actually ballooned to 3.04%. So it's down about 1.4% today to 187, according to, this recent Google quote that I just did. So here's a very attractive, very interesting company. I've just started doing my research on it. Fastest growing dividend that I've ever seen of any company that I've ever looked at, that I can recall at least from my failing memory. How fast that dividend is going to continue to grow, I don't know. Again, if you look at the long-term track record up here, it's almost laughable how powerful this company has been, turning $10,000 into really counting dividends over $15 million. It would have, had you bought it 20 some years ago, your dividend last year alone would have been $1.1 million. Now that's obviously not, relevant because you need to look more, currently on the company, but still, no matter what time frame you run it at, you'll see that the company has had very powerful performance relative to the S&P 500, as it's gone along. And even if you look at, the period of time since Mr. Chard has taken over the company, it's really outperformed the S&P 500. This is from 2014. He actually took over in 2016. So, he's produced just staggering outperformance relative to the S&P 500 under his tutelage. And that's something to consider. The stock is very inexpensive, trades at a blended PE of 14.6, earnings yield over 6.8%. And I want to make something clear. That's my minimum threshold of 6.67. That's for normal 6 to 8% growing companies, not for companies growing at 20% a year like Medifast. So I'm actually getting pretty excited about this company. I've got a lot of work to do. I'm going to reserve final judgment until I've completed my research, but I did want to share that with you today because I do believe it's a stock that could be very, very interesting. It could really help portfolios, whether you're looking for current income, which it does provide, whether you're looking for growth of that income, which it does provide, and finally, last but not least, whether you're looking for a company that can actually give you significant total return or capital appreciation, it seems to provide that as well. Company is, only has 7% debt on the balance sheet, has a very strong balance sheet, good cash position, and looks very well, positioned for the future. Keep in mind that obesity is considered one of the biggest real health problems that exist in the country today. And this company, at least, historically, in recent history, has proven to have a possible solution that a lot of people swear by. I did look at a lot of testimonials. I checked out a lot of other videos on YouTube about the company. I even saw some negative ones, by the way. I want to point that out. But what was interesting is that even with the negative videos, the negative discussions on the video, their customers seem to come to their defense. So anyway, this has been Chuck Carnevale saying thanks for watching. It's a very interesting little mid-cap stock here. Good dividend yield, good growth you might want to take a look at. If you enjoyed this video, please give me a like, ring the bell, follow the channel if you haven't already. I'm very pleased to say that we've now hit over 27,000 subscribers to the channel. Thank you all very much. We're very proud of that and very grateful for all of you for subscribing to the channel. Thanks for watching. We'll be talking to you again very soon.